Welcome back. I'm Monique from Monique Field Property, and this is George from Connected Finance, and we're here to bring a new topic to you around the finance industry. And over to you, George.
So today we just want to talk about the bank's calculators regarding your borrowing capacity. So I'm here to say, forget about what the bank says you can afford to borrow. Forget about potentially what the bank actually approves for you on their borrowing capacity calculators. Everyone has a different lifestyle, everyone has different expenses and a different financial position. I always say to my customers, forget about what the bank's calculators actually say. It's all about what the repayment is. And you have to be honest with yourself and determine, can you afford that repayment? Based on your lifestyle, based on your expenses, can you actually afford that repayment? Is it comfortable? Is it too high? Is it too low? What's really important for customers is to work out a budget and be honest with themselves and realize, is this repayment amount affordable? And then also what you need to do is, you need to add an extra 1% to whatever the interest rate is, and then look at what the repayments are on that increased percent. It's highly unlikely rates are going to increase by 1%, but no one's got a crystal ball. Worst case scenario can happen. A home loan is a 30-year commitment, so therefore it's always best for you to always look at worst case scenario. Let's say again, if the rate did increase by 1%, can you still afford that loan repayment? So again, it all comes back to the loan repayment. It's a 30-year commitment. It's your responsibility. Forget about what the bank's calculators say. Can you afford the loan based on your lifestyle and commitments and your expenses? And therefore you need to do a really solid budget and be honest with yourself to confirm whether you can afford that loan or you can't afford that loan.
Further to that, if you didn't see our last video on rate creep, have a look at that because it ties in beautifully with this. Interest rates may not go up by 1%, but you will find over a few years your interest rate is going up anyway with the bank. So unless you keep a check on it, you might find your home loan just by default becomes unaffordable. So very, very important that you talk with a broker who will actually run you through the nuts and bolts of exactly if you can afford the loan.
Yeah, and look, I'm more than happy to assist with looking at a bunch of different scenarios, whether you might need to adjust your price point, and that could be up or down, and looking at different repayment scenarios. So if you need some help, please reach out.